First of all, the number one performing stock in the S&P 500, mine.
Yeah.
We're up 30x.
Yeah.
That's 3 times more than NVIDIA. That's interesting. 2024 is like year zero of institutional adoption. If a rich person looks at the iPhone, how many do you want? One. You want one Tesla, one iPhone. But if I offer you a security that gives you twice the performance of the S&P, how many of them do you want? It's useful because it's the hardest money in the history of the human race.
Welcome back to the channel. In his latest interview on the Prof G Show, Michael Saylor explains how he came to Bitcoin during a time of desperation. MicroStrategy, his company, had $500 million in cash and nowhere to put it. After months of research, Saylor came to the conclusion that Bitcoin was his best bet. MicroStrategy recently announced plans to raise a further $42 billion through convertible bonds in order to purchase even more Bitcoin. Anyways, before we get back to Michael, don't forget to like, subscribe, and leave a comment. It helps out the channel immensely.
Was sort of the impetus for this very radical pivot at MicroStrategy towards Bitcoin?
I think in the middle of 2000, in the summer of 2000, what drew us to Bitcoin was desperation and frustration. So initially we had 500 million in cash. It was worthless. It was generating 0% interest. The company wasn't growing. We were under lockdowns competing against Microsoft. So, the only thing that we had in our world that was a bright spot was we had 500 million in cash and we thought maybe it was worth something. But when Jerome Powell said it's worthless for the next 4 years, we lost that, So we had to do something. Our initial, foray into Bitcoin was defensive. It was frustration, defense. It's either that or sell the company. So if you're not going to sell the company, you can die slowly, you can die quickly, or you can do a transformational acquisition. You can take a risk, and that was our transformational acquisition. What if you could buy a $500 million company growing 60% a year, which looks like its own digital monopoly, and you could bolt it on to a company that's growing not, 0 to 5% a year, that's not a monopoly. So we did that. Then Bitcoin surged, and we could opportunistically raise money via the convertible bond market. And we raised 650 million at 75 basis points. And then we raised $1 billion paying 0% coupon. And that point, I would say that stage is opportunistic. Like someone wants to give you billions of dollars of free money to actually invest in your business. Why wouldn't you? We got on the roller coaster. It went up and down. It surged, it crashed, it surged, it crashed. And I think by the beginning of 2024, it became strategic. And we realized hey, we're just doing this because we've got an operating company and we can do it. And between 2021 and 2024, we raised about $10 billion of capital. So we started with 500 million. We raised another 9.5 to 10 billion more. And now, now the question is, well, what's going to happen with crypto and what's going to happen with Bitcoin? You got the ETFs approved in January. 2024 is like year zero of institutional adoption. So the ETFs are approved in January. Wrote us off and said, well, MicroStrategy is unnecessary now. What they didn't realize is the ETFs are like overnight deposits. Like you put money into BlackRock, but you can take it out of BlackRock the next day. MicroStrategy, that 40 billion, that's our money. That's permanent. You can't take it out. We have 40 billion of permanent capital. And so what we realize is our real great strategic franchise here is we can securitize Bitcoin. So I can issue fixed income instruments, bonds, especially bonds and fixed income preferred stocks or high volatility equity. And those are all products the capital market wants. They want Bitcoin-backed securities. They either want 3x to trade, or they want 1/3 of the risk and 1/3 of the volatility to hold in a portfolio. So we announced October 30th that we were going to basically raise 21 billion of equity and debt. And that was well received by our shareholders. We just kind of said, we're going to be the leader in the industry. If you want to invest in a company like ours, we're the company. And then a week later, we just had a red sweep, and November 5th was was pro-crypto Congress, pro-crypto Senate, pro-crypto White House. Bitcoin surged, our stock surged. And I guess I boil it down to, it took us 4 years to get 10 billion. But by the way, it took me 30 years to get 500 million. It took me 4 years to get the next 10 billion. It took us 4 weeks to raise 13 billion more. And that's because the product you're selling is capital. I mean, you're selling a security. If a rich person looks at the iPhone, how many do you want? One. You want one Tesla, one iPhone. But if I offer you a security that gives you twice the performance of the S&P, how many of them do you want? Like all, until you hit your risk rail. So now I would say we're a Bitcoin treasury company, right? Where our operation is, we take crude crypto capital, Bitcoin, that's a commodity, and then we sell you an equity which is like 2x Bitcoin. And then we get to 2x by actually selling bonds and selling fixed income instruments that are half x or half of what we're doing, and we strip the performance and the risk off the bottom of the capital structure. We put it onto the top, and that way all the degenerate traders get what they want, and all of the risk-averse investors get what they want, right? And we're just the institutional gateway sitting in the middle.
It's the idea that it is...
Ed, come on. First of all, the number one performing stock in the S&P 500, mine.
Yeah.
We're up 30x.
Yeah.
That's 3 times more than NVIDIA. That's interesting. How about the number one options market in the S&P 500? Mine. We have the most intense options, like 130% of market cap. The most profitable convertible bond, the number one convertible bonds in the marketplace, MicroStrategy, right? It's interesting because people are making money off of it.
Right.
Everybody in the world. $2 trillion of market cap or of wealth has been created in 48 months for hundreds of millions of people. It's changing every minute of the day.
But in that sense, isn't what's interesting that the price is going up? Because you said, you know, it's nice when the price goes up. But what I'm also hearing is the interesting part is the price going up, the fact that it has become such a valuable asset class. And I guess my point would be, if there comes a time when the price starts going down, suddenly it's not so interesting anymore. And then I feel that it could all of that fire that you described can sort of poof a lot more quickly.
By the way, it was pretty interesting when it went down too. I give you the crypto winner. It's interesting because it's useful. It's useful because it's the hardest money in the history of the human race, right? It's interesting and useful because it represents property rights and monetary security or economic security for 8 billion people. It's interesting in the same way that electricity and clean water and steel and airplanes and fire and nuclear power are interesting because it's the single biggest way to improve your quality of life, right? And otherwise, it's interesting because it is a global, real time. It's changing all the time, every second. It's literally changing. Now, think about all the other financial assets. Conventional wisdom says, I create diversified portfolios of bundles of 20th century things like 187 real estate apartments, or a bundle of preferred stocks, or a bundle of corporate bonds. They have no volatility because they're engineered literally to be uninteresting. They're literally engineered so that on Saturday afternoon, there is nothing that could happen that would change their value to you. So you see, the fact that Bitcoin is engineered so that it does change value, someone is doing something. That's actually what creates all the volatility. But let me make one more point. Do you know the call rate? If you hold $1 or hold $1 million and you're wanting to hold it for 30 days, you're getting SOFR, the 30-day SOFR rate. You're getting about 4.8% interest. If you actually hold $1 million of the S&P index and you sell the call 30 days out at the market, you're getting like 15% interest. If you're holding $1 million of Bitcoin, IBIT, and you sell the 30-day call, you're getting 100% interest. And when you're holding $1 million of MicroStrategy and you sell the call, you're getting 220% interest. So when I say interesting, I'm using the classic sense. People are financially invested in it. And therefore, when it changes, there's hundreds of millions of people that all of a sudden feel it up or down. I'm also pointing out you can literally generate more interest on this thing. And there are more ways to actually make money on it. And that's why the ticker's on CNBC. CNBC's not showing you things that aren't interesting. They're not showing you the soybean price every day. They're not showing you, they're not going to show you the price of a diversified portfolio of real estate assets that are maturely and scientifically constructed, because the construction of the portfolio was to make it boring. And Bitcoin is, when you make it boring, you strip the performance out of it. And so the point is, let's come back to fire. Volatility is fire. If you're a normie, you run away from fire. If you're Henry Ford, you put the fire into an engine, you put it in a horseless carriage, and you create an automobile, and now people can go. And then you put it into a plane and a train.
That's good.
So engineers are putting you're a nuclear reactor in the spaceship. It's scary. In the submarine. But Bitcoin is like the financial fuel. These things are crypto reactors. It's a technically better way to do this, and it's the volatility that's actually the motor that's driving the portfolio or the treasury forward.